Hello and welcome back to the Ace of Trades. Thanks for coming out with me today. I just wanted to say thank you to all those recent subscribers. It's been going up a lot recently. I know YouTube has been giving my first video a lot more views. I've just been seeing a lot of growth recently, and I just wanted to say, thank you to all you guys that have been here for a while, or if you've just recently been a subscriber, this is your first time here, welcome. Um, I'm going to be trying to upload more videos here soon. I've just been in the middle of a new job and some training, so I've been getting caught up there a little bit. But I know that's not a good excuse, and I need to do a better job at it. But if you did see all of my talks about Neo around the new year, the December 31st was when I uploaded that video about Neo Day being a little over a week out. If we actually look here, um, on the monthly chart, I actually uploaded that video the 31st, where it ended up at 48.74 a share, and you could see the next trading day on the 4th, it actually closed at $53, so that was a big 9-10% jump there, and then climbed all the way up to almost $65 here just 3-4 days ago. Now it's just been dipping again back into the 57s and 58s. But if you did buy some options or buy some shares before that, I hope you enjoyed those profits. We did see a lot of growth there very quickly, just like we expected. Um, I didn't take a full advantage of it like I should have, but I did know it was going to happen, and I wanted to make sure that I had a video out there just so I could come back and say, I told you so, if you didn't try to get some nice profits out of that. But today, I did want to go over just this new style of a custom option spread that I've been looking into. And I actually have only tried it once so far, and it went in my favor. I profited about 20% on it. But it was a pretty small trade. And I haven't really been able to find a lot online for it. So maybe you guys can help me out. But I really like doing um, debit spreads, both calls and put debit spreads. And I know you guys probably know that. And if you've been here for at least a couple of videos, I talk about them a lot because I use them a lot. But sometimes people ask about hedging, buying in the opposite direction of that call or put in order to, supplement uh, a little bit of money from a potential loss that they could have. And I've never really even done a whole lot of hedging when it comes to doing spreads, just because I believe they are safer, and they are. But there's still the ability to buy a hedging position there, and I feel like I should be trying to look into something like that. So there were a few times when I've bought, a similar position on the other side, and I don't really like how sometimes they almost cancel out when you're buying on the opposite side to hedge your position. And I feel like I just want more control in it. So the way I could change that is, say I want to go with a debit spread like I usually would, and I want to do it under the share price and have to pay a larger premium for it because it's more likely to happen. So let's start with buying a call at, let's say $54. I don't think that Neo is going to be dropping below $54 by next Friday, and we can do this about a week out. And because Neo is down 6% today, and that is down to 57, I don't think they're going to come down to 54 by next week. I think that they're going to be recovering back into the $60 range. So I'm going to make a debit spread down here, and let's sell the call, just one on top. So we're paying $32 right now for potential gain or a potential equity of $50 for that contract. Now it went down to 27. Actually, I don't like that. I think I want to bump it up to 55. Let's make it a full dollar. Okay, so right now that's $65, and that max contract could be worth one, so $100. So that's not too bad. So to supplement this with a hedge, let's buy another call. Just hear me out. buy another call that's a similar amount to this spread here, so around 65. And it looks like that's going to be the $65 strike. So I'm going to buy a call there. And then to hedge both of these positions, I'm going to buy a put that's also around $65, which happens to be the $51.50 strike price a week from now. So you can see it says custom up here, and our $54 and $55 buy and sell calls are the debit spread, and that gets added on as a positive amount when you subtract the sell. And then both the buy call and buy put are positive numbers that get added onto that as well. So this is $190 to buy this contract in total. But here's why I'm intrigued by this type of spread. If I go back to my calls, I can see that I have a debit spread that I am paying about $65 for right now. I think that this is going to be worth $100 by the end of next week or around. And that's why I set that first. So if NEO stays at 57 or goes up, we're going to lose value in our put that costs 64 right now. So say if it goes up next week or gets closer to the date of expiration without really going down closer to this put, this is going to go down in value. So say maybe 2 days into next week, halfway through the week, I'm going to sell this at a loss. But I'm only going to sell it once I know that NEO is going back up, so that I'm gaining equity on my spread. And also, if it's going up, my $65 call next week is going to be adding profit as well. So this is essentially just taking a debit spread and adding both a regular call and a put to it to make it more of an averaging type of play. So this is a call and so a positive gained leaning type of play because it has both the debit spread and the call. So if NEO would go down, say the opposite thing would happen, we would probably wait until it gets close to the top number at 55, and it still might add a little bit of value to our debit spread as we get closer to next week if it takes a while for it to climb back down. But essentially, we'll be selling this before it really loses the value we're putting into it right now because it's under the money, and that's the good thing about it. We could sell it for probably around its same value, even if this share price creeps down next week. So let's say we can get the same amount, around 60 out of that. We're going to notice that NEO is going to come down, and we're going to sell our call maybe at a 20% loss. That's what we should go for. But now that this is sinking, our put is going to be going up in value as well. So in this instance, we're probably going to end up losing money, although we won't lose a ton. And that's the point of hedging the position. We're going to be losing money on this because we have a call debit spread and a call put, and only one put, and we've bought 2 calls. So we're going to lose money if this happens, but that's why I said we are call leaning. We're leaning with the debit spread and the call. So, why don't you guys try this out for yourself? I know it was a little confusing for me to explain it. It's really confusing to say it out loud, but it all works out in my head really well. So maybe I should have some type of commentator, but I hope you guys understand that. And actually, when I did buy this, it was Jamia Technologies. It was not NEO. But I did make a 20% gain on that. And it was pretty sweet because it actually only went up a little bit, about $1 or $2 over the course of the following week when I had bought it. And so I sold the put at about a 25% loss, but I secured almost the max gain in my spread, and I gained about 15 to 20% on my call. So it really worked out well, and I'm going to be playing around with it a lot more just to see what I can do, especially with other companies as well. I'm not just sticking to Neo. I have been trying to expand my boundaries a little more in case you guys are kind of irritated by that. But yeah, that's it for this video. I just wanted to say I am thinking about starting some type of $200 to $2,000 like just contest for myself, just to try to see if I can make a small account grow to a more sizable amount within a manageable period of time. And it's something I have done on a smaller scale before, so I believe that is something I could do. And I think it would be fun just to be able to drop little videos and updates about that into the channel. So if you guys made it this far and you think that's a good idea, please give me some feedback and let me know what you think about that. I just think it would be a cool addition to the channel. And let me know what you think about this video. If you're going to try out this strategy, if you think that it's smart for small accounts, I think it's a safe way for small accounts to use a larger amount of their equity in their account than they usually would on a single trade, just because there's more control over the type of profit you'll make. But let me know what you think, and if you're enjoying the content, please leave a like and subscribe, and I'll catch you guys next time. Thanks so much.